Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES balanced within a range and then broke below that range and tested the 0675 to 0775 area, which we're going to be using as the micro bull bear zone. Heading into the open, we also have resistance at 0975 to 1175, and if ES continues to reject and hold below 0975 to 1175, that could lead to a break below the micro bull bear zone and a test of yesterday's low at 02 quarter and the initial support zone at 99.75 to 01.75, which marks the bottom of the current short-term balance. Now, the more times you test any given support area, the more likely it is to finally crack and give way to some lower prices. And that 99.75 to 01.75 area at this point has been tested 3 to 4 times, and another move into it would be a risk point for buyers. So it doesn't mean that the buyers can't hold it at that zone, but if we're seeing extreme weakness in the internals and strong momentum and volume on the sell side, then we will have to be careful and cautious at that 99.75 to 01.75 zone, because at this point it could lead to a break below balance if we go down there, and that can lead to a test of the 90 half to 92 half zone, at which point responsive buyers can still be active in the market at that zone, because bigger picture, we are still in an uptrend, and the first test of every support zone, even after a short-term long liquidation, can still result in a bounce. It doesn't mean it has to result in a complete reversal, but you can certainly see a reaction at 90 half to 92 half, and get maybe a 5 or 6 point bounce off the zone, depending on how the market actually approaches it. Now, on the upside, if we take out 0975 to 1175, that would indicate buyers still fairly active in this market, and that can lead to a test of the all-time high area and potentially a breakout to new highs, as long as we're not seeing any weakness on the advanced decline. So we do need to see some broad market strength, or at the very minimum a lack of broad market weakness, in order to get some higher prices. And if that's not the case, then it's unlikely that we're going to actually put in a sustained move to a new all-time high today. Looking at the other markets, NQ and TF both broke to a new yearly high yesterday, but so far they haven't really been able to sustain the gains that we saw yesterday. So keep an eye on NQ at 44.59 to 44.65. That's the breakout area from yesterday, and if NQ fails to hold above that area, then that would also be a red flag for ES, and it can lead to some selling pressure. In the Russell, keep an eye on the 1234 to 1236 zone. That's the primary high volume node within the current balance, and if Russell fails at that zone, then again that would be indicating weakness in the market, and it can result in some selling pressure in the S&P. So right now the bias heading into the open is very cautious, and short term actually bearish if we hold below 0975 to 1175. We know that the bigger picture is bullish, but we have started seeing some warning signs in even the other markets, and if ES fails to get above 0975 to 1175, then I think that we're going to have some trouble seeing higher prices, and that can even be a spot where ES fails. So heading into the open, we know that in the short term, on the smaller time frames, the sellers are actually more in control, and we are going to have to see a move back above 0975 to 1175 to confirm that the buy side is still intact here. Volume is still relatively light. It's improving a little bit. The volatility is expanding a little bit, but overall we continue to be in a relatively light volume environment, and overall a relatively low volatility environment too. But that doesn't mean that that theme can't change. If we start seeing again higher volume and some directionality in the market, then volume can actually pick up pace throughout the day, as well as volatility. So keep an eye on 0675 to 0775. That's kind of the last spot, at least in the short run, for buyers here. 0975 to 1175 is really going to help us establish the bias on the day time frame. If we continue failing there, and the internals are weak and continue to weaken, and the momentum is not quite on the upside, then 0975 to 1175 has potential to be a failure spot. And if we break from there below 0675 to 0775, that can accelerate the downside movement. But overall, we're stuck basically in this range from initial support to initial resistance, essentially. And the market has been stuck in this balance for over a week now, so it is setting up for a directional move. It's simply a matter of time, and that could be even today that we get either a breakout or a breakdown of this balance. And for that reason, the bias heading into the open is actually very neutral, and we're going to use the micro bull bear zone and the pre-market resistance zone to establish the overall bias on the day time frame. And then whichever way we go, we can probably get some directional conviction behind that move. So that is the main idea heading into the open. The econ calendar is fairly light, so any movement we see today is really going to be driven by the price action here, and depending on which way we break. So those are our main thoughts. Let's see how the market reacts to the micro bull bear and pre-market resistance, and we will take it from there.